Okay, class is begin. Good evening, I remember. So long time no give the English talk. Today the topic is about the 3 axioms of technical analysis. So my name is Jessie. Before the seminar, because we know today is the Valentine's Day, right? So before the seminar, let's see some jokes of Valentine's Day. So why just this is the joke, okay? Why do couples fight? My wife sat down on the couch next to me as I was flicking channels. She asked, "What's on TV?" I said, "Dust," and then the fight started. Can you understand? Then my wife was hinting about what she wanted for our upcoming anniversary. She said, "I want something shiny that goes from 0 to 100 in about 3 seconds, right?" So I bought her a waiting scale, and then the fight started, right? Because the shining goes from 0 to 100. What is that? Diamond, right? Car. Okay. So when I got home last night, my wife demanded that I take her some places expensive. So I took her to a petrol pump, and then the fight started, right? Because we can understand, the husband cannot understand. My wife was standing and looking in the bedroom mirror. She was not happy with what she saw and said to me, "I feel horrible. I look old, fat, and ugly." So if woman felt like that, you should know if the husband should say some good things, right? "Then I really need you to give me a compliment," I replied. "Your eyesight is perfect." And then the fight started. Let's see the next one. I asked my wife, "Where do you want to go for our anniversary?" It warmed my heart to see her face melt in sweet appreciation. "Somewhere I've not been in a long time," so I took her to my parents' house, and then the fight started. So you know, because men and women are quite different, right? And man is different. So maybe if your wife talk to you some things, then you should know the meanings, right? So this is the joke. This is the joke, right? Then about of the Valentine's Day. So because we know that maybe some. So let's continue our class. Today the content is about the 4 points. The first one is analysis of current market. The next one is 3 axioms of technical analysis. The third one is different strategy between blue chips and penny stocks. Then the last one is the strategy for current market. So this is the content of today's course, and I hope you can understand better. So firstly, let's see how to grasp the primary trend of stock market by trend expert. We know the application of trend expert, right? Then we know the trend expert include the main line and the Dow candlesticks and the assistant lines. So how to use trend expert to grasp the primary trend of stock market? First one, monthly chart reflects the operating pattern of the market. Weekly chart reflects the strength of the market, and daily chart identifies the buy and sell position. Okay. So let's back to our chart. We can click expert, trend expert, right? So firstly, the monthly chart of trend expert can help us to judge the primary trend. Then the weekly chart reflects the strength of the market, and daily chart identify the buy and sell position. Okay, so let's see this chart. The monthly red candle operating patterns of bull market. Monthly green candle operating pattern of bear market. So if you see the monthly chart, green turn to the red candlestick, you should change your mind because this is the monthly red candlestick of 8 expert. So we should have the operating pattern of the bull market because if you see the green turn to the red, you know this is the bull market. The bull market is coming, so we should change our mind and change our operation pattern. Okay, so if you see the red candlestick to the green candlestick, you should know this is for the operating pattern of bear market. Okay, so let's see the chart first. This is the monthly chart. Okay, this is the monthly chart. Then we can see how to know that the market is bull market or bear market. Okay, so if you see the green candlestick turn to the red candlestick, you should know this is the bull market. We should change our mind. Then we can keep or buy some stocks during this period. Okay, so let's see the time, the date. The 2016. We can see here 2016 and I forgot how to the 29th. Okay, so we can see here from at this moment the market is bull market. So maybe we can buy our stocks at this period. Then we can still keep our stocks. So this is the monthly chart. Okay, let's see the next one. You should know when to sell. If you see the red candlestick turn to the green candlestick, you should know this is the bear market. This is the bear market. We should change our mind. Okay. So the next one. Weekly chart reflects the strength of the market. So we can see if we see the red candlestick of weekly chart, so we know that the market is strong. Okay, we should keep our stocks or do some strong rebound. The daily chart identifies the buy and sell position. If we see the trend is good, green turn to the red candlestick, green turn to the red candlestick is the buy point. Green turn to the red candlestick is the buy point. Okay, so let's see the market. This is the daily chart. And we know that the trend is still up, right? But today had some correction. But for the primary trend, it's still up. So we should know if we want to buy some stocks, you should wait until the red candlestick turn to the green candlestick, then turn to red candlestick again. Maybe we can catch some good chance. So let's see the chart first. So today, big drop. Okay. So let's see the volume. Let's see one candles. Let's see the volume. The volume is decrease or increase? Decrease, right? So this is a normal adjustment. So no need to worry. And you should know this is the time black hole, right? So we know that this point, the market has some support. So we know that if the market touch the support, maybe have some rebound again. So this is the market. Later I will show you the details. Let's see the next one. What is the technical analysis? Today we will talk about the difference between technical analysis and fundamental analysis and how to trade the blue chips and the penny stocks and what's the strategy for operating these two kind of stocks. The so-called technical analysis, which is the way to research on market behavior through the chart and judge the future trend. Then technical analysis is a method of market research in which market behavior is the object of study. Meanwhile, the future trend is the purpose of the study, and the chart is the tool. So we know that why we use software to analyze stocks for us, because this is based on technical analysis. We have so many indicators like KDJ, MACD, RSI. You can use these indicators to judge the stocks and the forex and the options, right? So this is the technical analysis. Let's see see the next one, the market behavior. Market behavior is extremely complex, in which the price is the purpose of technical analysis, is the primary research object. So volume is very important because we know that the price, the volume, time, and space are the four elements of technical analysis. So volume is the key point. Volume is the verification of price movement. It is the blood of the stock market, reflecting the degree of market activity, playing a good supporting role of the price movement, for the price movement. So we should judge the volume, it's very important. So let's see the chart. We know there are so many strong stocks like this one, Mermaid, strong or not? It's quite strong, right? But last time, because some members bought this stock and asked me whether I should sell or not, because it's too high, it's so high already, right? So here, I told this member, because we can know that, I told him that you can sell half position to avoid some short-term adjustment, because he's very confident with this stock. But in my opinion, I think the price may have some correction. Okay, so why I think the share will have some correction? Because we can see here, this is the price, right? The price up, the volume increase, good or not? It's the good situation, right? But we can see here, the price up, the volume decrease, right? So I think price and volume deviation. If you see the price is still up, but the volume decrease, you should know the price may have some short-term correction. Okay, but if you use the function to judge, poor expert still hold signal, right? Which means the medium-term trend is still up, but short-term you should sell half position on Monday. So here, I told him, if the Monday you should sell half position, but he saw it. He saw this stock still can go up, so he still keep it, right? So we should know that how to judge. The volume is very important for us to judge. Let's see the next one is Noble. Noble is also strong, right? Today we can see sharply up, and this is the gap. So whether can buy now or not. Last time I taught you one good function to judge the buy low point. This function is called dynamic chips, which can show us the short-term buy point and sell point. Okay, so let's see this one. Last time, one member asked me, Noble is good or not? So here, he asked me on that day. Then we can see the dynamic chips is purple color, right? Purple color means the oversold area. So I told him that if you see the purple turn to the yellow, you can buy. So here, still cannot get in, right? Wait and see. Purple turn to the yellow, buy or not? Buy. Then next day, he bought these stocks around 0.173, the buy price, okay? But we can see after buying, the price sideways for some time, right? Then he sold around here. I told him that you should hold because the shares still have chance, but he cannot bear it because if after he bought, the price is sideways, so he sold. Then after he sold, the price sharply up. So he told me that I'm regret because I lost 800. If I keep, I can earn $800. So we can see here whether can buy here or not. So we can see the color. The dynamic chips is the red color, right? Red color means the overbought for short term. If you see the red turn to the yellow, you should know for short term, sell first, sell half position or 1/3 position, okay? So now can buy or not? Because we know there's some news for Noble, right? Okay, so let's see the pattern. We can see the volume, right? Let's see the volume. The price, we see here. The price sideways, the volume is same. The price up, the volume increase. Volume, price drop, volume the same. Then the price up, the volume increase, right? So this is the normal, okay? But whether can buy or not, now, can buy or not? No, we should wait and see. So we can see this one. So this function is quite useful. So let's see this one. The purple color, right? Purple turn to the red color is the buy point for short term. So you can buy at open price. Then you can catch some short term rebound. So let's see the mermaid. Mermaid. I told one member long time ago, the price is around 0.170 something, 70, maybe 77. Okay, so why I said this stock is strong? So let's see this one. The trend is still uptrend because we can know how to know the trend is uptrend, because we can see here the red bull and bear expert. The band is still red band, right? Which means the medium term trend is good. Okay, so if we see the trend is good, we can buy. We can find some buy point. So we can see here, this is the purple color, right? We know purple turn to the yellow is the short term buy point. So next day you can buy at this price, then you can catch some good profit. Okay, so we can see here. We can continue. So now we see here. This is the red color, right? Red color turn to the yellow color. What should we do for short term? We should sell for short term. Maybe you no need to sell full position. You sell 1/3 position or half position, okay? Because the medium term trend is still up. The still have chance. But you should know, if you see the red color turn to the yellow color of dynamic chips, you should sell for short term. So you should sell around Friday, okay? Then you can avoid some short term adjustment correction, okay? So let's see this one. This one is quite strong, right? Because the trend is good, but we should know when to buy, when to sell, how to catch the short term buy point in the uptrend. We can see here. Let's see whether have purple color or not. So here is the purple color, right? If you see the red bull and bear expert, the band is still red band. Then green, yellow turn to the purple, then turn to yellow again. Is the buy point for medium term uptrend. Okay, so you can buy for short term. So here, the red column, the purple color again, right? Purple turn to yellow, you can buy again. Then you can earn some good profit. So you should know you can use this function to judge the short term buy point. But the premise is that the trend is good, right? So let's see some high volume stocks. Then we should know how to catch good profit at the current market. So what is the best trading strategy for current market? Okay. So let's see some high volume stocks. Every day you can check which one is better. So last time, because the last Friday or Monday, or this Monday, I filtered some stocks. So let's see some high volume stocks. The first one is Noble, right? It's still strong, okay? So then we can see next one. This one is the high, you can see here. There's no volume, but the volume start to increase. Maybe we can focus. Then we can see this one. This one start to adjust right. But we can see the main trend is still uptrend. So we should wait and see. So we can see the next one. This is the purple color, right? Purple turn to the yellow, you can buy at this price, then you can hold for medium term. So we can see this one. So the purple, right? Purple turn to the yellow, you can buy. Then you can wait and see. And if you have this function, maybe I think you can catch some good profit. Okay. So this is the stocks. So last time, I think maybe this Monday, I'm not sure which day, I filtered some stocks. Last time I already taught you how to set this filter method. Then I filtered one function, some stocks. Then after, okay, not this time. So maybe maybe 10, I'm not sure. Then I filtered one stock. Then after I filter the stocks, then I analyze according to the chart. I will look at the pattern and some indicators to judge which one is better. Okay, so the time is the 10th February. I use this method to filter some stocks, but you can see so many stocks, right? So how to know that which one is better? Okay, so if you finish the filter, you can analyze some stocks according to the chart. So let's see the first one, this stock. This stock we can see here, the trend is still up, right? And if we can see the chart, the price up, right? And the volume increase is good, okay? So I filtered around 10th here. Then the price up a lot, right? Maybe you can do some short-term rebound. This is the first one. Let's see the next one. This one, the trend is still good, but we can see the price had some correction, so we need to wait and see. So the next one, filter this stock around here, right? So if you buy, you just wait and see because the trend is still up. So now is the good time to filter some stocks. Then after you filtered, you can use the indicators like the volume and some functions of Homely software and some indicators to judge which one is better. Okay, so this is for the market behavior. I already told you why the volume is so important. Next one, price and volume. Okay, this is the market. Then next see the volume. What's the difference? The price up, the volume increase. Then the price up, the volume decrease or increase? Decrease, right? So you should know the price will have some correction. Okay. Then we see here, volume up, then the price up, the volume up. Then the price up, the volume up. So this is the normal, okay? But if you see the volume down, the price go down, but the volume increase, it is not good, okay? So this is the price and volume. What's the difference? If you see the price go up and the volume increase, it's good. Volume go up, the price go up, but volume decrease is not good because this is the deviation. So you should pay more attention to the short-term risk. So the trend. Trend is the core of the technical analysis. The study of price charts is to judge timely and accurate at the early stage of trend formation and development so as to follow the trend. It's not easy to change once the trend is formed. So if we want to judge the trend, we can use trend expert, bull and bear expert, Homely rainbow. So you should know which one is better. So we have so many indicators to judge whether the trend is strong or not. So let's see the first one. This one is short term. This one is trend expert. Just now, at the beginning of the class, I already taught you how to use trend expert to judge the primary trend. Firstly, you can see the monthly chart. The monthly chart is green turned to the red candlestick, and the red is still the red candlestick, which means you can know that you can keep the mind in the bull market. Okay, so if you see the red turn to the green, you should know this is the bear market. You should sell your stocks or hold money. Okay, so let's see some stocks. So let's see this one. This is the monthly chart, right? The monthly chart, the trend expert is still red candlestick. So good or not? It's the good. In the market, this stock is still okay for holding. Okay. Then we can see the weekly chart. Weekly chart strong or not? It's quite strong, right? Because we can see the trend expert is still the red candlestick, and the body is higher. Okay, so then we know that the trend is still good. Then we can use the daily chart, when to buy, when to sell. If you see the green turn to the red candlestick, it's the buy point. So you can buy here, then you still can keep it. You can earn some good profit, right? So firstly, you can check the monthly chart, then check the weekly chart. Next one is for daily chart to judge when to buy, when to sell. Okay. So this is the trend indicators. So let's continue. The chart. Charts include bar line, dotted line, TWR, candlestick, geometric candlestick, homely candlestick, and so on. The best way to the performance of the chart, geometric candlesticks, homely candlestick, and homely down candlestick. So geometric candlesticks reflects the profit and loss of the market. So it's different with the common indicators, the common candlestick. Homely candlestick is based on the level of profit and loss with turnover rate. However, homely down candlestick will filter out the daily price movements and merge trend with candlestick. This is the chart. So let's see. Later I will show you let's see the chart. Okay. So when we can see the candles, we normally use the genomic GCAND. Okay. The original indicator is different. So this is the TWR. This is the bar, the dotted, the TWR. So many indicators, so many chart. Okay. So later I will show you. Then we can see the next one, price and volume deviation. Just now I already taught you how to use price and volume to judge the deviation or not, how to judge the deviation. So you should know how to judge the short-term correction. Okay. So this is the sample. The first one, we can see this is the indicator. But if we use this indicator to judge, it's very difficult to understand, right? The next one is this is the some chart. Then this one is TWR. Okay. So this is the sample. Then we normally use the geometric candlesticks. Okay. So let's see next one. This is the bar line, the dotted line, and the TWR. Just now I already show you the explanation of technical analysis. So next one, we talk about the fundamental analysis. The fundamental analysis is based on the basic theory of economics. That is, find out the factors that affect the relationship between supply and demand of stocks according to the principle of the relationship between supply and demand of goods, and judge the future price trend by these factors. So it's different. Maybe we can read the report. We can see the financial performance. Then we should know whether the company is good or not, make profit or not. So we can use some factors to judge the company is good or not. But we can see the fundamental analysis only help us to judge whether the value of the company, okay, but cannot to judge the buy and sell point. If you want to know when to buy, when to sell, you should follow the technical analysis. So this is the fundamental analysis. The main contents of fundamental analysis: the relationship between supply and demand is the direct cause of price changes, and there are many factors that cause changes in supply and demand. We can grasp the stock price changes only through carrying out a comprehensive analysis. Okay, so if we see the homely software, we can click information, the material. Then here is the stock information. Then we can read the company brief, then the corporation, and we can see the growth analysis, profitability. We can read these factors for fundamental analysis. Okay, so this is the software. Then we can see the next one: fundamental analysis and technical analysis. Fundamental analysis is the discovery of the result from the cause, but the same reason does not necessarily produce the same result, which is the confusion of fundamental analysis. The first one, the well-known information is useless, and the useful information is far from individual investors. Okay, if we want to get the real and timely information, I think it's difficult. The technical analysis is we can see extrapolating the future trend from the past price and present in the chart, which is the reasoning process from the result to the new result. So therefore, fundamental analysis does not care about the reasons for price changes, but only concerned about the result of price movement. So it's the difference. So let's see the next one. The study of fundamental analysis must be done. Firstly, the message you collect must be comprehensive. Okay. Secondly, the information you collect must be true. Then thirdly, your information must be timely. Fourthly, you should master the relevant knowledge of finance, monetary and banking, business management, financial accounting, securities investment analysis, social psychology, and so on. If you understand these factors, maybe you can use fundamental analysis to help you to judge. Okay. Then there are many reasons for the price changes. We do not know the reasons of stock ups and downs, but there must be a reason behind the price rise and fall. So emerged through price volatility. So it contains a variety of known and unknown factors. But technical analysis for the price research is single. Rare, there's one reason for stock ups and downs, that is the price rise if the buyers more than sellers, while the price fall if buyers less than sellers. If you see the buy volume is more than sell volume, you should know the price will up. But if you see the buy volume is low and sell volume is high, you should know the trend is downtrend. Okay. So this is the fundamental analysis and the technical analysis. So let's see the first one. Market discounts everything. This is the basic theory of technical analysis. Known and predictable factors that affect price movements are all reflected in the price, and all the above factors are absorbed by price fluctuations. It makes sense only by recognizing that learning and applying technical analysis, that is the theoretical basis of technical analysis. So what's the meaning? Market discounts everything. So if the news is bad news, they will reflect it in the chart. Okay. So let's see this stock. This stock is already hotted. So why dropped a lot? Due to the bad news, right? So if you see the chart is not good, you know the news is not good. This is the bad news. So let's see one stock. Let's see this one. Let's see this stock. This stock is called Unifiber. So why I talk this stock? Because we can see here the price So we see here, this is the date, and then the stocks halted. Then after the price halted for some days, then open, we can see gap, right? Open low. What's that meaning? Because the company is not good. The company is not good, so the profit is not good. So the price drop. So this tells us that the market discounts everything. Okay. Next one, price moves as trend. Price movement is not random but regular. The original direction trend to continue once the trend is formed. This is the premise for application of technical analysis. This is the most fundamental and the core element. See this stock. Why this stock is so strong? Because we can see the trend is still up. If you see the uptrend is formed, you should know the price will move in the uptrend. Okay, so we can see the trend is still up. We can see some stocks. Let's see Noble. Okay, we can draw the trend line. This is the downtrend, right? So when you see the price upward break out the downtrend, what that meaning? You should know the trend is reversal. You should know that. So here the trend of the Noble is from downtrend to the uptrend. Okay, so this is the uptrend line. This is the uptrend line. So the Noble, this stock is still in the uptrend, right? So the price moves as the trend. Okay. So if you see the price, the share is in sideways, maybe it's different. The price ups and downs. Okay, there's no trend. So let's see the next one. This one is also strong, right? This one is very wrong. So we can see this one. The trend is still uptrend, right? So the price upward break out the uptrend again, which means the uptrend will continue. Okay, so let's see this stock. Strong or not? It's quite strong, right? So we can see this stock is from downtrend to the uptrend. Okay, so let's see the trend line. This is the downtrend line, right? Then the price upward break out the downtrend line, then which means the trend is not downtrend anymore. The uptrend is coming. Okay, so this is the uptrend line. So you know that it's good. Then the price will move. Price moves as the uptrend. So we can see here, the price up, the volume increase. The price up, the volume increase. The price up, the volume increase. So good or not? It's good, right? Okay, so this is the trend. Then we can see the next one. History will repeat itself. Things that have already happened will happen again, but not simply repeat. The same price pattern has influence in the past, but the future will have the same effect. This is the basis of technical analysis. So let's see this stock. This stock is called Alliance. Okay, so let's say that this stock is very normal. We can see the trend is down, right? Then rebound, then down again, then rebound. So this is the one low point, the second low point, the third, the fourth one, the fifth one. Then we can see when the price touch the low point or high point, then we can know the price will go up or go down again. So the history will repeat itself. So let's see this stock. Alliance, right? So we can see the trend is uptrend or downtrend. Still uptrend, right? We can draw the trend line. Connect the low point to the high point. Still uptrend, right? So we can see the volume. The price up, the volume similar, right? It is still good. Okay, so we can see why the price cannot break out this high point. If the price can break out this high point, maybe will go up again. So if you judge this stock, you can judge the buy and sell point according to the low point and high point. Okay. Then we can see the price touch the low point, then go up. Touch the high point, then have some resistance. Okay. So this is the third one. Okay, so this is the 4 factors of technical analysis. The first one is price, then the volume, the time, and the space. Okay, so if we grasp these 4 factors, I think technical analysis is very useful for our trading. So let's see this one, the logic of share market. The company fundamentals decide the profitability dividend, because we like holding some stocks has good dividend. Then affect investor psychology. Then inform price trend. The price trend reflect the company fundamentals. Okay, so if you see the trend is up, you should know the company has some good profit. Okay, so this is the logic of share market. Company fundamentals decide profitability dividend. Profitability dividend affects investor psychology. Then investor psychology will inform price trend. The price trend will reflect the company fundamentals. So this is the logical. The essence of up and down for share market. Intrinsic value decides main direction of price, but it is the investor sentiment that ultimately affects stock price. Okay, so this is the essence. Let's see the intrinsic value. But let's see this one. We can see these 2 charts. So this, like we can see, maybe this is the profit report. This is the profitability dividend profit report. Okay. Then we can see the profit is increased every quarter. What's that meaning? You should know the trend will be the uptrend. Okay. Then maybe one day the profit shifts. This is the profit. Then decrease. You should know the company will lose some money. Okay, then you should know the price, because we know that this one reflects the company report, right? So you should know the trend is not good. Okay, so this is the meaning. So let's see this one. If you see here, this is the profitability dividend. Okay, the profitability dividend decrease. Okay, then you should know this is the price trend. If the profitability dividend decrease, then the trend will go down. Okay, so let's see this one. This is the profitability dividend. This is the trend. If the profitability dividend increase, then the trend will go up. Okay, so it's very important. If you want to check the stock is good or not, you can check the profit result. Okay. Let's see this one. This one is the same. If this is the profit, we can see the profit result decrease, right? So here, no more profit, loss. Okay, company loss. So you should know the trend will go down. Okay. So if you see the profit like this, the price will go up. From this 4 chart, what information you can get? From this 6 chart, what information you can get? If we check the profitability dividend, check the result, okay, report. So which stocks we should focus, okay? So this one or this one? This one, right? Because this one means the trend will continue to go up, the uptrend. So if we see here, this one you should know, not good, because the company profit is no more yet. So let's see this one. Which one we should choose? If we only check the financial report, the profit report, which one we should choose? The second one, right? Because this one, if you are the bankers, right? You should, if you are the banker, you want to operate some stocks, you will choose this one or this one. Obviously, this one is better, right? If you choose this one, maybe banker lose some money. So this one is better. We should choose this one. Then the next one, which one we should choose? This one or this one? This one, right? Because no loss again, from loss to the profit. So this one, maybe bankers like to use to operate these stocks. Okay. So this is the information. This information we can get from these 6 charts. The idea and strategy for blue chips. Because if we have so much money in our account, but if you maybe some members like to invest the whole money to the blue chips, good or not? Maybe it's steady, but if you want to make good profit, unless you buy at low point, but if you buy now, maybe you cannot make some good profit. Okay, so this is the idea and strategy for blue chips. If you want to invest a blue chip, you use $100,000. Okay, so this is the value, the company value, and this is the price. Okay, so then this is the uptrend, right? Then the price start to drop. Okay, so what should we do? Then dropped a lot. Then the price dropped to 20% to 30%. A bull is foreign. You buy or not? If you want to invest some blue chips, if you see the blue chips dropped around 20% to 30%, you buy or not? You'd better wait and see. Okay? Then the blue chips drop again around 40%. You should know the little bear over, you should add maybe 20,000. You can buy 20,000 shares. Okay? Then the price drops again to 50%. This is the media bear over. You can add 30% position. Okay? Add more. Then the price dropped around 60%. The big bear over, you can add 40% position. Can you understand? Then the next one, drop to 70% or more. You should invest the last 10,000 plus your house, plus your cash. Right? So you can buy blue chips. Okay? So, but this strategy is only for blue chips, not for penny stocks. Okay? So you should know what's that meaning. If you want to invest the blue chip, okay? So if you see maybe DBS, well, now we know that DBS up a lot, right? But if we last time, because we know DBS dropped a lot, then start to up again, right? But you should know, if you want to invest the blue chips, if you have 100,000, so how to run your position is very important. Okay, drop around 20 to 30, you cannot buy. Wait and see. Okay, 40, maybe you can add some little position. Okay, small position. Then add to 50, you can add one more position. You can add more position. 60, more position. 70. More and more position. Okay, so let's see DBS. DBS, we know that dropped after a lot, right? So the price start to drop here. The price is around 20, then drop to around 12. What should we do? Dropped around 60%, right? So what should we do? Here, maybe we can add some position, right? So here, we can buy these stocks in keep the put our cash, the whole cash, to these blue chips, and you can earn a good profit. Okay, so if we buy here, around here, or here, earn a lot or not? Yes, you can earn some good profit, right? So let's see the next one is capital N. This stock also dropped a lot, right? So we can see here, from $3 to $2, right? So drop some, right? So here, buy or not? You can buy some position, right? Okay. So let's see the next one. One call. Let's see this stock. From the high point, $3, then the low point, $2. So if you put some position here, you can earn some good profit. So this is the trading strategy for blue chips, and I hope you can understand. Then you can see some other indicators like, let's see this one, Wilma. So let's see the high point. The high point is $5. The low point is $2. Dropped around 60 to 70%, right? Buy or not? You can add position, right? Because this is the blue chips. So if you want to invest some blue chips, you can use this trading strategy. Okay. Then if you buy here, then now it's already $2 to $3. You can earn some good profit, right? So if you want to invest blue chips, you should use this strategy to do that. Okay. But if we invest some stocks, we can put 70% capital to the blue chips, in the blue chips. Then the other one maybe 30% capital to the penny stocks. Okay. So why we use 70% to and 70% to and 30%? Because blue chip is steady, right? But the penny stock is dangerous. So we should put small money in the penny stock, okay? But put more money in the steady stocks like blue chips, okay? Because we know blue chips will not disappear, right? So, but penny stocks will suspend, okay? So this is the trading strategy, the idea and strategy for blue chips. You should remember this is very important for us. If you see the blue chip, if you want to invest, maybe you should know how to control your position, okay, and how to do that. So this is the idea for and strategy for blue chips. So the next one, the idea for middle cap or small cap stocks, okay. Oh, what's that meaning? Let's see this one. This is the value. This is the price. If you see the price drop, then start to sideways, what should we do? If this stock is small cap or middle cap stocks, so if you see the price drop, then sideways. If you see the price upward break out the sideways area, you can consider buying, okay? Because here is the good buy point, okay? So let's see some stocks. Let's see some stocks. So we can see this one. The price drop, right? Then sideways, right? Because we can see the low point is higher, but the high point is lower. So this is the sideways, okay? Then we can see next one. This one no need to care. So this one is the same. The price drop, then sideways, then the price upward break out the sideways area with the high volume. So this one is good, okay? So let's see the next one. This one is the same, right? The price dropped a lot, then sideways, then upward breakout, okay? So let's say Yangzijiang. You can see here. The price drop, then sideways. Then the price upward break out the sideways area with high volume. So we can see the price up a lot. Okay, so this strategy is suitable for middle cap or small cap. If you see the price drop, then sideways, if the price upward break out the sideways area, you can start to buy. Okay, so this is this one. Then the next one, answer for this one. Okay, so let's see these two charts. What is the difference? This is the first one, the financial report. This next one is also the financial report. So which one is better? If you see the financial report, then you can know the trend is up or down. So this one, uptrend or downtrend? Uptrend, because the report is very good and the company always make profit, okay? But the second chart we can see good or not. So we can see the price, company can make profit, then loss then make profit again. So this one, the trend is like this, down, then sideways, then up. So this is this one. This is for the uptrend stocks. So if you should know that, how to read the report. Okay, you don't need to care about so many factors like the company profile and the company shareholder. You don't need to care about this. Okay, if you want to check, this one is enough. Okay, so let's see this one. Answer for this one for the 2. The price drop, right? But we can see A to B. How long? Around 1 year is better. But maybe several months the price will go up. But if you see the price sideways around 1 year, then if the price upward breakout, the price will soar. Okay? So we can see drop, then like this one. Maybe the price will like this, drop, then small uptrend, then so again. And this one, go down, then sideways, maybe around 1 year. Then if the price upward breakout, the price will up a lot. Okay? So this one is the same. 1, 2, B. Then like this, so again. So this is the chart you should know. Maybe you want to know the price is in sideways, but how long will last? The sideways will last. You don't know, right? 1 year is better, or below 1 year. Maybe several months. If the price sideways around several days, you should know the price only for short-term rebound. But if you see the price sideways around 1 year, then the price go up, break out. This is for the medium long term. Okay, if the price, the A to B is around several months, only for short, medium term. Okay, so this is the answer. This chart you should remember. This one is for blue chips. This one is for small cap or penny stocks or middle cap stocks. Okay. So answer for this one. Then 3 indicators for buy and sell. 3 indicators. What's that meaning? 3 indicators. Okay. The first one is homely rainbow. The second one is multicolor dragon. The last one is volume. We can use these 3 indicators for judging buy and sell point. Okay, so firstly, let's see the homely rainbow. The white line for the long term, blue line for the medium long term, yellow line for the medium term, then red line for the short term. Okay. Then if we see the price, the yellow line gathering, which means this is the turning point. The price will choose the direction. Okay. So let's see this one. If you see the price like this, the yellow line from gathering then turn upward turning. Okay. Then the multicolor dragon, the red color, is above 25. Then the volume increase is the buy point. It's the good buy point. Okay. So let's see some examples. Firstly, let's click the homely rainbow. Okay. The next one is for the multicolor dragon, MCD. Then the last one is for the volume. Then you will know which one is the good buy point or sell point. Okay. So we can see the yellow line gathering. So here, the yellow line gathering, then the price upward breakout the sideways area, and the yellow line start to upward turning. The red column is above 25. Okay, the volume increase. So here, can we buy or not? It is the good buy point. Okay, then we can make some good profit. So let's see the next one. Let's see this one. Firstly, we can see the yellow line is gathering, right? Then start to up. The red column is above 25, volume increase. Here, can we buy or not? Maybe you dare to buy because the price up a lot, rise rose a lot. Maybe you are afraid, right? But here is the good buy point because the first situation is satisfied, the second one and the third one all satisfied, which means here is the good buy point. Then you can earn some good profit. Okay, you buy around here. Okay, then now maybe you keep or sell, you can make some profit. No matter earn a lot or earn little, the key point is you can make profit. Okay, so let's see the next one. Let's see this one. Then we can see this one, can we get in or not? So we see here, can we buy or not? Then we can see the yellow line still gathering, right? But we know the red column is above 25. This situation is satisfied and the volume increase. But here, can we buy or not? Cannot, because the price didn't break out the yellow line. Okay, so here buy or not? Wait and see. Okay, when to buy? If you see the price upward break out the yellow line and the yellow line from down to up, this is the good buy point. Okay, so let's see the next one. Can you tell me which one is the good buy point? Here or not? Yes, it's the good buy point. Then we can see here. Let's see this stock. Can we buy around here or not? Firstly, let's see the homely rainbow. The yellow line from gathering and is gathering, then the price upward breakout. The multicolor dragon red bar is above 25. Volume increase. Can we buy or not? If you are not sure, maybe you can here buy or not. Then you should know how to judge. Okay, so let's see this one. Moya Holding is also strong, right? Why the stock is so strong? If you see the chart like this, you should know the company is good or not. Obviously, it's good company. Okay, maybe made a great profit. Then we can see this stock. Which one is the good buy point? So we see here. The yellow line is gathering. Then the price upward breakout the yellow line. And the multicolor dragon, the red bar, is above 25. Volume increase. Here buy or not? Buy point. Okay. Then you can earn some profit. If here you never buy, here you can buy again, right? Okay. So if we buy around here 0.055, 57, now it's already 0.077 and great profit. So maybe you can consider sell. If after sale, maybe the price will go up again, but no need to care, because you should know this is your own profit. You cannot know that. You should know that you cannot earn every time. Okay. So this one no need to care about. Now let's see this one, odds group. So which one is the good buy point? Can we buy here or not? Can we buy here or not? So firstly, let's see the chart. The price drop, then sideways. Okay. So let's see this one. Sideways like triangle pattern. Today, the price upward break out the triangle pattern and with high volume. So here can we buy or not? The share may have chance, right? But whether can buy or not? Maybe we can see check the company report, company profit, company performance. The profit is good or not? Okay. But this one for the chart can buy or not? It's the buy point, right? Because we can see the holy rainbow from gathering then up, then the price up the breakout. The multicolor dragon red bar is above 25. The volume increase. This is the buy point, okay? But you should know the long-term trend is still down, right? Because the white line is still down. So you should know the white line had some resistance, okay? You should know that. If you want to do some short-term rebound, maybe here you should see whether can upward break out the white lines or not. So let's see this one. This one is also good, right? So here can we buy or not? It's the good buy point. Maybe here from this chart you know this is the good buy point. But if I put here, do you know this is the good buy point? Obviously we cannot know because nobody will buy here because we are afraid. So here is the good buy point because the yellow line gathering, then the price upward breakout. The multicolor dragon red column is above 25, volume increase. So this is the good buy point. Then you can earn some good profit. Okay. So let's see this one. Which one is the good buy point? Here can we buy or not? Yes, it's already, these conditions are all suitable. So here is the buy point. So let's see this one. Can we buy here or not? Of course can, okay? So let's see the next one. Can we buy here or not? Can we buy here or not? Yes, okay. So let's see this one. This one is so strong. Why this stock is so strong? Because we can see the price from down, then sideways around 1 year, okay, or 2 years, around 1.5 years, okay. So if the price upward breakout, the price will soar, okay. So you should know that. So here is the good buy point, okay, because the price upward breakout the sideways area. Just now I already told you the trading strategy, right? So what is the trading strategy? If you use this method, you should know when is the good chance to get in, okay? So this is this one. Then if we buy here, we can earn a great profit. Maybe you can consider sell, then you can keep take profit, okay? So let's see this one. This one from down then sideways, but whether can upward break out or not, we don't know. We cannot know, right? Because this is the big resistance. But when is the good buy point? So maybe here can we buy or not? Maybe you can buy, okay? You can buy at this day. The price is around 0.0 22. And now the price still 0.022, right? But you should know here, sideways, when to get in, when is the good chance to get in? When? Sideways, right? You should wait until the price upward break out the sideways area. Then the price will soar, okay? So now maybe you can pay attention, but you should find the good timing to join, to get in, okay? So let's see this one. The price just upward break out the white lines, but you should know whether the breakout is effective or not, okay? So let's see this one. This one good or not? Let's see the chart. From down, then up, then we can see this one. So whether this one is good or not, let's see the price up, the volume decrease, right? So maybe you should wait and see until the price upward breakout, okay? So let's see this one. This one, okay or not? Of course, it's not good. We wait and see. So this one we already talked about. So this one good or not? No, sideways, right? So why I told you that you should find a good timing. If you buy here, then now you keep. You will waste the time, okay? So you should wait until the price upward break out this line, then you can buy. But now you wait and see, you cannot buy, okay? So you can use this function to judge. Let's see the loosely. Loosely, why the price here, okay? The white line has the resistance. So you should know, if the price can upward break out the resistance, maybe you can consider buying. So this is the chart, you should know how to judge the chart, okay? So let's say this one. This one is still sideways, right? But whether can buy or not, here can buy or not? No, because the volume not increase, okay? So this is the indicators. You should use 3 indicators for buying and selling. Maybe you can use other functions, okay? If you don't want to use Holy Rainbow, maybe you can other functions. Then if you don't want to use these 2 indicators, but you should use the futures which you think is suitable for you, okay? So this is the 3 indicators for buy and sell. Let's see this one, the buy. Okay, this is the first one, right? The second one, the third one. The first one is, let's see the chart pattern. The price just touched the support. This is the first one. Then upward break out the pattern. This is the second one. Then the price is still up. Then has some correction, touch the support, then go up again. This is the third one, okay? If you invest this kind of share, maybe 10,000, okay? So like this pattern, the price drop, then you can see the price drop, right? And sideways as triangle pattern. This is the triangle pattern, okay? So here, the triangle pattern. We can connect the pattern from this point to this point to this point, right? Then we can draw the triangle pattern. If you see the price touch the support here, you can buy 70% up. So this is the possibility. 70% the price will go up. 30% the price will go down. So you can buy $3,000. Okay, at this point. Then the next one. The price upward break out the sideways area, okay? Already break out, okay? So break out, then the price rebound, adjust and touch the support again. So here, go up again. Here, you should know 80% up, 20% down. You can add $4,000. Then the price go up because the trend is no more downtrend, the uptrend. So here, you can see the price has some correction, then go up again. So this one, 90% up. 10% down, you can add $3,000 for your investment. Okay, so this is if you want to invest some kind of this stock like this, you should know how to control your position. Just now we talked about how to buy the idea and the strategy for buying blue chips. So this one is for small caps or for all stocks, I think. This one is for all stocks, okay? So 3 ways for sell. First one, if you see the price touch the resistance, you should sell first, okay? The second one, set up a profit target. Maybe you want to make 10%, then you should, if the price touch the 10%, your profit is around 10%, you'd better sell first. No need to care about the future profit, okay? This one is important. Set up a profit target. Then calculate the up change from banker's average cost on accumulation phases. So let's see this one. $0.01 to $0.1 more than and equal to 80%. Safety profit target 50%. You should sell. Okay. So next one, $0.1 to $0.5 more than and equal to 60%. Safe profit target 30%. Okay. Because most investors do not know how to set the profit target. So you can according to this, okay, based on this. Then if you see the price is around $0.5 to $1 more than equal to 40%, safety profit target 20%, okay. So the third one, breakout and downtrend downwards the 20 moving average trend line. Maybe you also need to know whether can buy or not, sell or not. For example, breakout and downward the green line of homing rainbow, maybe you can consider buy or sell, okay? Because the green line of the homing rainbow, based on the moving average, is based on this parameter, the 20 days moving average, okay? So this is the 3 ways for sell. Because you know when to buy, you should know when to sell. If you know how to buy but don't know which point is the good sell point, obviously you also cannot make money. So buy and sell point are both important. Filter way of dark horse. If you want to filter some dark horse, maybe you can use this function to judge, okay? The condition 1, moving average. 120 moving average equal to 200 moving average equal to 300 moving average. The condition, quotation, close price hits a new high in 60 days. And this one is for the price, $0.01 to $1. But this one is up to you. If you don't like penny stocks, maybe you can increase. Put $0.1. Okay, it's up to you. If you like penny stocks, you can set this one. This is the close price. Okay, so this is the filter way of dark horse. So let's see you can do that. Firstly, you should click moving average and change this one. Then quotation, close hits a new high in 60 days. Okay. Then the close price, maybe you can change. It's up to you. Okay. So if you like penny stocks, you like blue chips, you can set the close price. Okay. So this is the filter ways. You can try. Okay, whether can filter or not, you can try at home. So this is the operation strategy for current market. We know this chart. Okay, we all read this chart. We all read this chart already. Okay, so this is the STI prediction. So maybe this is the big support. This one use the chips distribution to judge the support and the resistance. Okay, so we know that the price is around here. If the price can up, then this is the next resistance. Then go down again. The resistance change to the support. Then go up again. Maybe the next target is here. But this is only the prediction. Prediction is not important. the strategy is important, okay? You should know how to do that, how to operate your stocks, whether if the price go down or go up, you should know that. This is the operation strategy for current market. So let's review today's course. Today we talk about the 3 axioms of technical analysis. Then, because today is Valentine's Day, so we read some jokes, okay? So why do couples fight? Because you know the men and women are different, right? And in the stock market, our operating pattern is also different, right? So you should know why it's different, okay? So this is a joke. Then contents. Today we talk about the analysis of current market, 3 axioms of technical analysis, different strategy between blue chips and penny stocks, the strategy for current market. So this one is important. Grasp primary trend of stock market by trend expert. Monthly chart reflects the operating pattern of the market. Weekly chart reflects the strength of the market, and daily chart identifies the buy and sell position. So this one, monthly red candlestick, you should keep the operating pattern of bull market. The monthly green candlestick, this is the operating pattern of bear market. Okay. So if you see the red turn to the green or green turn to the red, you should change your mind. Okay. So weekly chart reflects the strength of the market. Then the daily chart identifies when to buy, when to sell. Then what is the technical analysis and the market behavior? This one, price and the volume deviation. This is very important. Okay. So the next one, we talk about the fundamental analysis and technical analysis. Then we talk about the market discounts everything. Then price moves as a trend, and the history will repeat itself. Okay. So the important thing is like here. You should know the idea on the strategy for blue chips and the small cap stocks and middle cap stocks, and how to invest stocks, how to control your position. Because if you think this stock is good, you cannot put whole position at this period. Why? Maybe you think this is the low point, right? Why I cannot put whole position at this point? Because this is the possibility, right? They have 30% possibility the price will continue to go down, right? So at this one, we do not know whether the price will go up or not. So only we know the possibility. So this one, we cannot put whole position. We only buy 3,000 position. If the price continue to drop, if we sell, then we easy to stop loss, okay? So this one. There's 3 ways to sell. The resistance, set up profit target. How to set profit target, you can according to this. Then breakout, downward, 20, moving average, or green line of homely rainbow. Then how to filter dark horse, because we all like holding dark horse, right? But how to filter? You can use this method. You can use breakout filter method. We learned a lot of filter methods, but you should find which one is better for you, okay? So this is the operation strategy for current market. You should know what should we do. So maybe the market will move like this way, but we don't know. This is only the possibility, okay? So if you think the possibility is high, maybe you can do. But if you think the possibility is not high, it's too low, you cannot do. Okay. So you should know what should we do or what shouldn't do. Okay. So this is today's course, and thank you for attending the seminar, and happy Valentine's Day. Thank you so much.